towards the gain here. Let's get more insights onto China's property market with Stephen Schwartz. Stephen is chief economist for Asia at BBVA. He spent over a decade at the International Monetary Fund. We're also joined by Willy Lam. He's the adjunct professor of history at Chinese University of Hong Kong. He's going to share us with the political angle of this story as well. First of all, Stephen, let's talk about these figures that we've had today. Can you put them in context for us?
Yeah, hi, Rish. Great to be with you today. Well, what we're seeing in China, I think, is a healthy moderation. We're seeing growth momentum slowing, still strong, but very much in line with the soft landing we had hoped for. That's being backed by the cooling of the property sector, along with the measures that the authorities had implemented to achieve just that. It's very encouraging that they're taking early action to prevent bubbles and distortions from forming at an early stage.
We can't talk at it as a uniform country, though. I mean, we have parts of China which are definitely surely in a bubble now, and others which are, well, pretty benign.
Right. I mean, we've talked about this before. You've got different categories in the housing market. When we think of bubbles forming, we're talking about the big Tier 1 cities at the high end, but affordability is an issue at the low end, and I think that's the real thing that the authorities are focusing on, is maintaining affordability for the low-income segments of the population.
So a soft landing picture is what you have here. That's the thing.
Very much. The data month after month is coming in very much in line with that soft landing scenario we've been hoping for, and overheating risks are moderating as that data comes in.
But the central bank and the authorities themselves, they have, well, not that much room here, do they? There are a lot of constraints that they have in terms of what they can actually do.
Well, they've got a lot of levers at their disposal, and they've taken their foot a little bit off the accelerator, but they don't want to tap on the brakes too hard because they're mindful of the external environment. We're going to get trade data out later today. It'll be interesting to see whether that very strong export data stay high. But the authorities have a lot of room, if needed, for further stimulus. So they've got a lot of latitude, actually, on both sides here, but they're walking a fine line.
Quickly, second half. Most people suggesting we're going to see economic growth moderate. You're in that camp as well.
Definitely. We see the second half moderating compared to the first half, but I'd again emphasize it's a healthy moderation. So we're still looking at strong growth for the year as a whole.
Quickly, how does property play into that?
Well, property is helping to, the cooling prices are helping to slow the economy, but it's also part of the stimulus measures. If necessary, the authorities can step up investment in public housing, and it looks like they're set to do that, especially at the central government level.
Now, I want to kick it out and get the political side of this with William Lam. He's from the Chinese University in Hong Kong. Oh, great to have you here, William. Let's talk about the constraints here in place as well between local authorities who need to sell land in order to finance infrastructure projects and a central government which is, well, not allowing them to do quite as much as that and can actually really tighten the purse strings.
Well, certainly there's a tug of war going on between central authorities and local authorities. Well, shall we say that the many local officials are in cahoots with real estate developers, and most, perhaps more than 50% of the local county level governments are heavily in debt because they have invested so much in the property market. There are more than 50 so-called urban development investment vehicles which have now incurred perhaps 10 trillion yuan in debt, mostly because of investments in real estate property market. And if the prices were to fall, then you can imagine the devastating impact on the local regional economies. Plus, don't forget the fact that most provinces and county-level administrations derive as much as perhaps 45% of the revenue from the property sector, sale of land, and also taxation from property transactions. So I think there's a huge lobbying effect.
Yeah, is that what you, when you say cahoots, is that what you're talking about? Is it just merely lobbying, or does it run deeper than that?
Well, there's been allegations and suspicions of corruption, and I think the authorities are now investigating many cases of local governments, local officials whose spouses and cronies and so forth are actually running property companies which are heavily backed by local administrations. So there's a lot going on, but I don't think that because of the strong lobbying effort by the local governments that the property prices would fall drastically.
So, but again, the danger is when this lobbying continues, they want the property prices to continue to rise at pretty substantial rates here in order to make themselves able to finance what they're trying to do there as well. So is it only a short-term blip that we see this slight cooling take place?
Well, in China, according to various estimates, there are already something like 60 to 80 million empty flats. So I think sooner or later, I think the market forces will work to depress the prices, even though the strong pressure is also required from the central government, for example, to restrict speculation and also to prevent so-called collusion between both central and local officials and property developers.
A lot of tightening measures in place, a lot of levers, as Stephen was talking about, that they do have. Do you think they're using the right ones here?
Well, so far, I think the central administration has been working with restraint. Of course, they are very eager to maintain the 9–10% growth rate, and they're afraid that if there were to be a hard landing, then this might have a detrimental impact, not just on the property sector, but because of the multiplier effect on other sectors of the economy. So I think they're looking for a soft landing, and there's a possibility this might happen perhaps 2–3 years down the road.
Willy Lam, thanks a lot for that. Let me just kick you back to Stephen here. Now, what do you make of that, the cahoots between the local authorities, local developers? That's happening, but do we see that change? Does the model have to change here in order to create more transparency, if you wish, in the Chinese property market?
Yeah, I think it does, and I think it will over time. Let's not forget that the market-oriented property sector is still pretty new in China. It was only in 1998 that the market opened up. So there's still an experimentation going on, and this discussion highlights the tensions that are there between the central and local government in implementing this policy. Over time, they've got to remove that incentive that local governments have to keep prices high, and a property tax that's being discussed is one element of that.
This trade data out a bit later on today, over the course of the next 45 minutes or so. What are you looking for? What will it show?
Well, we're expecting a slowdown on year terms. May and June, we saw very rapid export growth, well above 40%. We think that's going to moderate into the mid-30% range, but that's still a healthy figure, showing that the external environment's holding up nicely still.
Stephen Schwartz, Willy Lam, thank you very much indeed for joining me here. Right, Stephen Schwartz from BBVA and Willy Lam from the Chinese University of Hong Kong.